Let's find some day trades, swing trades, and option trades. Hello, everyone. It is Tuesday, June 2nd. We're 2 hours and 45 minutes into trading. Let's see what's going on with the market today. You can see how we had this gap higher. Market came in, filled the gap, a couple of long tails under body, had a little bit of a rally in here. We had a nice 10P cross right in there. That's a bullish cross. This is the indicator that we use to tell us which side of the market to be on. You can see how it troughed here, and we had this nice cross right in here. Told us to get long, so we tried a few longs. Here we had a spike and a reversal that coincided with this bearish 10P cross. It told us to be careful, especially when this upward sloping trend line on M5 was breached. We tried some shorts. I'll show you some of those. Then we got another cross down in here, right in that low right there. You can see how anticipatory this indicator is. It took me 10 years to develop. We could trade S&P futures using this indicator, but why do that when we've got a huge advantage to trading stocks? We find relative strength and relative weakness, and that gives us lots of cushion so that if we're early in the trade and the market continues to move in that direction, let's say right here, let's say we start buying and we see this 10P cross and the market continues to drift lower. By being in stocks with relative strength, those stocks are going to hold up very, very well. And if the market does have another leg lower, we'll be able to cushion that blow because the stocks have a natural bid to them. That's how we do this. We use the one option searches to help us find these stocks, and then we post them in the chat room. So let's go back and take a look at what these red bars tell us. We took out the low of the day pretty easily. We took out the prior day's close pretty easily on these long red bars. The bounce has been pretty tenuous, but it's lasted quite a while, which tells me that there is support. The next leg lower, if we take out that low, it's probably not going to be a huge wave of selling because we're already starting to see a bid form here. We've got a higher low, so those are all good signs, and we're able to actually hold that support level. So if you take out these extremes right in here, you'll see that this general support level right at the 905.60 level is able to hold. That's kind of the 1 hour low as well if you take these out. So we could just waffle around right in this trading range. If we do see any kind of movement, I believe that it's going to be on the downside, and I believe that this support could be challenged. So let's see what happens throughout the course of the day. Very lackluster trading. We'll go into that daily chart. You can see by the tiny candled bodies here that the close has been close to the opening price. That tells me that buyers and sellers are paired off. We do have a little upward drift higher. We're just floating higher on light volume. I call this a seller's boycott. Sellers are simply holding off, expecting higher prices. So there's not much going on. The market has a little bit of momentum. It's through that critical 295 breakout. That's very important. It's above the major moving averages, the 100-day and the 200-day moving average. That's also important. It's been able to spend now a week above that 200-day moving average. That's good. Now it starts to solidify that support at SPY 300. That's a critical level. SPY 300 is very, very important. SPY 295 is very important. We've got that horizontal resistance, now support, and the 100-day moving average coming into play there. We also have this upward sloping trend line. So until these technical support levels are breached, do not short on a swing trading basis. Intraday, you bet we can short. We're finding some stocks that have really run hard. They're lofty. We're starting to see some decent two-sided action. So during the course of the day, we're able to look for longs and we're able to look for shorts. And we use that 10P indicator to help us time which side of the market we're on. If you're a swing trader, every trade has two dimensions to it. One is the underlying stock and the other is the market. We've been selling out of the money bullish put spreads. We're going to continue to do that on strong stocks. But if the stock breaks technical support, if it breaks that support that we've identified in the videos, then we need to exit that trade, and we're watching those levels on an end of day basis. So as a swing trader, you don't have to worry about intraday price movement. You want to watch those levels in the last 5 minutes of trading, and then if the stock is closing below that support, then you close out the position. Until then, you stick with it, especially if you don't have any cause for concern in the market. The other dimension that you have to watch on these bullish put spreads is what's the market doing? Is the market still above these critical support levels? If I saw the market come down and close below the 200-day moving average on a long red candle, I'd be a little bit concerned. I'd be watching the bullish put spreads that I have on. As long as those stocks still showed relative strength, I could stick with the position. But if we take out this 295 support level, I don't care how strong the stock is. Now you're starting to challenge major technical support. That uptrend line will be challenged. That 100-day moving average, the horizontal resistance that's now support. We go below SPY 295, you need to buy in your bullish put spreads. Now, because we're selling them inside of 2 weeks, I like to sell all of my bullish put spreads no more than 2 weeks out. That means that I have maximum time premium decay, and it's accelerated in the last week of its life. That's what I want to have working in my favor. When I put the spread on, my greatest danger is the first 2 or 3 days. After that, time premium decay is already starting to kick in, and by the last week of its life, if the market happened to move against me, I'm probably going to be able to reel those bullish put spreads in for a gain. Go to the sidelines, see if there's any follow through on the market selling, and then reevaluate conditions. So I'm constantly reevaluating conditions on a weekly basis, and I'm rolling into new spreads, and that strategy has worked extremely well for us. I don't really see the market doing a whole lot in here. We've got asset managers erring on the side of being long because they know they have a safety net in the Fed and stimulus programs from the government. And this is not just the case domestically, this is happening globally. And so, with interest rates at 0%, asset managers want to be in the market. Hey, if by chance this recovery really takes root, if consumer confidence increases, if we see pent up demand, they're already long the market, they're in position, and the market can continue to go higher. If the recovery starts to struggle, maybe the riots are keeping people out of the shops. Maybe the coronavirus scare is keeping them out of the shops. We haven't seen a resurgence, so I don't think coronavirus is going to be much of an issue. I think the bigger issue for consumer spending is going to be job security. If people feel that their jobs are not secure, they're not going to spend because they're going to feel that they're going to get laid off as soon as the PPP stimulus runs out. That to me is the biggest wild card. We're just in a waiting mode right now for the next month, month and a half to see if consumer spending is starting to gain traction and tick higher. Now, we did get some pretty good news from Visa this morning. They said that their credit card receipts in May were up. That's good. That's a sign that people are spending money. But we need to have clarity before we can really spread our wings, so to speak. I see this as a very low probability trading environment for swing trading and for day trading, so I'm keeping my size down. On my day trades, I'm trading half of my normal size in the morning. I'm trading a quarter of my normal size in the afternoon. And I'm not really trading much in the afternoon because once the market settles into its range, you can see by these tight bodied candles, it doesn't move much. So there are times when you need to lay low as a trader. This is one of them. It's a low probability trading environment. We're getting into the summer doldrums. The volume's very light. We don't have a lot of clarity. Corporations are not providing guidance. They've all said that Q2 is going to be worse than Q1. So now we just have to wait and see what happens. Let's take a look at some of the trades that we got into this morning. And I'm going to have this 5-minute chart of the SPY up so that we can track it. I believe that we're starting to see a little bit of resistance right in here. Let's see if we get that rollover. I'd like to see this 10P indicator come even higher and cross over right at about that same level. That would be a nice entry point for shorts. Tech stocks have been beaten down a little bit today. We're going to put up that QQQ, and you can see here the QQQ is below the prior day's close, and it has been very weak relative to the SPY. So let's do that another way. Let's put SPY back up, and then I'm going to overlay QQQ, so it'll be the gray line, and then you'll be able to see point for point what QQQ has done this morning. So here's the market rally right here. Now you can see how the market came, and it was right at about the low of the day here. but the QQQ blew right through it. So it has a lot of relative weakness. It has bounced back a little bit. I think tech stocks have some room on the downside. We're seeing a rotation into cyclical stocks, so that's, pretty natural. But if you're looking for shorts this afternoon, we've been in some tech names that have been fantastic. So I'm going to go into a 5-minute chart. I'm going to show you some of the shorts that we've been in. CRWD was one that one of our members was in. He noticed this breakdown right in here, stock after earnings. That was a beautiful short. I actually traded ZM on the long side. I liked this breakout. I liked it pushing higher with the market really flat on the open. I took a 5-point hit on this. I took a $5 loss on it, but I was able to pivot and I was watching it. It was not able to hold the support. When I saw that long red candle, I was able to short it here when it was below the prior day's close. Did make about 2 points on it. Then I made another 80 cents on it on a short. So I am still down on ZM for the day, but it did provide a nice shorting opportunity. I did short DOCU, and these are stocks that came up in our searches. Once it took out this low right here, I was short DOCU. I made about $1.80 on that total. I shorted it a couple of times. Let's see, what else did we get into? W was one of my big winners this morning. I recognized that strength right out of the gate this morning. I bought that, took a $5 gain on W. Very, very nice trade. SQ, I like SQ, and I think that actually sets up really well for one of the featured stocks today. Like SQ getting through this relative high right here. It's breaking out. It's also got a really nice D1 chart. You can see that. Also, you have Visa reporting higher sales. That's good for transaction processors like SQ. I like this stock. I think it does well today. You can see the relative strength right now. Stock making a new high for the day. Market's still trying to recover. So SQ is one of the stocks that I'm going to feature. I did make $1 on that stock earlier this morning. That was a really nice trade. SPLK, I traded on the long side right out of the gate, and I'm glad that I got out of that because I think it reversed. It did. I like this gap higher right in here early in the day. I was able to get in, and I took $1 gain on it, but I started to notice these long tails above body, and that told me that there was some resistance. Fortunately, I was able to take profits, and then the bottom fell out. So you've got to be very careful on some of these tech stocks right now. So let's see what else we've got cooking here. Let's see if any of the other stocks look weak. First, we'll take a look for day trades. So I need to make this caveat. When I show you stocks that look attractive on the short side, I am only talking about day trades. No swing trades on the short side. Not when we have the SPY above 295 and the SPY above 300. Do not pick tops. Do not try to short this market. As much as I think that valuations are stretched, the market can continue to go higher. We cannot get short until the market has some technical breakdowns below that 300 and that 295 level. So if I show you a short, that means if the market looks like it's going to reverse and you are a day trader, they may be an opportunity for you to short this stock. Otherwise, you've got to be looking at the long side. And I'll show you some of those as well. But I want to show you some of the searches that we would use. Heavy selling is one that I like. GILD, very weak price action. You can see it right here. There's the relative weakness that we speak of. Market up, up, up. You can see it here out of the corner. And stock down, down, down on its low of the day. Take a look at that daily chart. What does that tell me? That tells me that this could be a nice short, but it's going to find support at the 100-day moving average. So it's not that attractive to me until click GTC, double click on the bottom of that bar right there. Now we have a GTC alert line set right there, horizontal. If the stock breaks that, I'm going to get an alert, and then I will know that it is below the 100-day moving average, making it an attractive short, and I'll see a pop-up right in the middle of the platform. That's how we do it. So I can keep looking, keep setting alerts, keep looking, keep setting alerts. When I get the market move, then I can take that alert and see if it's worthy of a trade. So SPCE, You can see here it's below the 100-day moving average, gap lower today, chopping around, really hasn't broken out. It's in this range right here, so not of any great interest to me. But with the market moving higher, I am going to take a look at stocks that have relative weakness. This is kind of nice. You can see this breakout right here, which should be horizontal support. We're below that horizontal support, long red candle, closing on its low. We've got a downward sloping trend line now. So let's go into the M5 chart, and you can see pretty nice, steady selling action. Symbol FNV, Frank Nancy Victor. So that looks like a pretty nice short. TNDM, a little bit on the choppy side. Look at the daily chart. Not too much going on there. CRWD we looked at earlier. That's just simply a high flyer that gave back some gains early today. It had earnings after the close. BYND has been on the list for a bit. Don't see anything too compelling here. Really looking for some kind of horizontal breakdown, technical breakdown. AEM, that's a gold stock. TGT, NEM, also a gold stock. We've got a bearish engulfing pattern forming right here. Nothing too interesting to me right now. Bear run. These stocks have been trending lower. So let's take a look at what we've got there. Nothing popping out at me right now. So let's take a look at the long side. I've got a couple of stocks for you there. And I'm going to go right into the bullish search. And since I'm looking for a swing trade on the long side, what I'm going to be looking for is a strong after earnings search. All of these companies have reported in the last 2 weeks. So the earnings reports have been fairly recent. And the stocks gapped higher. And the stocks are trading above that gap. Very, very easy search to run. I went through this list. I clicked through. I had a number of candidates that I liked, but one in particular that I liked was LOW. And here you can see how it's through this horizontal resistance right at that 126 level. So I think this one sets up well. Not a lot of premium, so not very good for doing any kind of bullish put spreads on it. And you can see how the stock is actually starting to weaken a little bit. But I do like that breakout, so that was nice. One that I do feel presents a trading opportunity is DLTR. And it's right down in here. We'll take a look at what that stock is doing. A little choppy in here, okay, but holding its own pretty well. And we'll go into that daily chart. And here you can see that the stock gapped higher on earnings. B is before the open. So we had a nice gap through. We've got horizontal resistance. Now is horizontal support coming into play. Let's click on that. The closing price there was 93.89. So we've got the 200-day moving average at a similar level. So we've got support with that. Then we have support with that. I like selling somewhere around that 92.50 level. Let's see what kind of credit we can get for that. It's a grocery store. You know, they stayed open during the coronavirus, so their same store sales were way up. They're benefiting from this. And let's put up that trade. Click on trade, go to the option chains, take a look at what we might be able to get. So here would be looking to sell a $93 put right below that 100-day moving average and buy a $92 put. Well, you can see that the bid-ask spreads on these are a mile wide. And right now it shows an 80-cent bid, but it's not. That's actually a negative 80 cents because this bid on these calls is on these puts is so low. So negative 80-cent bid offered at 80 cents. Somewhere in the middle is zero. I need to get, for a spread like this, I need to get 20 cents. I need to get a 20-cent credit for it. So let's throw something out there and let's see if we can get a 20-cent credit for it. And we'll test the waters, see if there's any interest at that level. Doesn't look like it. Open order for right now. So we'll keep it out there. I'll see if I can get filled. We may need a little bit of a pullback in the stock. We may need a little bit of a pullback in the market, and that's okay. The market's sideways right here. I don't want to be forcing trades. I don't want to be chasing stocks. If the stock comes in a little bit, we can see that it has moved pretty well based on these tails above body. Great. I need the stock to come in a little bit so that I can sell below that $93 level. If I can, I've got support there. I've got support there. I think that it'll be able to hold up pretty well. So that's the type of trade that I'd be looking for. And in that particular instance, I was using the June 12 expiration. So I'd only have to wait a week and 4 days for that to expire. If it expires and I'm able to get a 20-cent credit on that $1 between the strike price spread, that's going to represent a 25% return based on my max risk and my margin requirement. That's a beautiful trade, and I'm not forcing this trade. I'm not in any kind of high flyer. This stock has actually gapped up nicely, but it's holding its gains. So it should be able to hold that bid well. Relatively conservative. They sell food, everything for under $1. I think that they can do quite well in this environment. So that's the type of trade I'd be looking for. And let's see if we've got anything else that looks good in here. Williams Sonoma. Click on that, take a look at it. You can see this nice breakout here through horizontal resistance. There's your earnings after the close. It's able to gap through, hold the gap. Today, it's on its high right now. I think WSM looks pretty dang good, and it looks good on a day trading basis, and it may set up well for a swing trading basis. I'm going to go into stock SR, and I'm just going to take a peek and see what the option liquidity is. Not bad at a 4. So let's go back in. Let's click trade. Let's identify where we think we'd want to sell a spread. So right here, I'm going to hover over that, and I can see that the opening price was $76.66. So I'd like to be inside of that $76 level, maybe at the $75 level, but you can see the stock is at $84. So I don't know that I'm going to get a lot for a credit like that. So I'm going to bring this back in, and you can see that it does not have weekly options. So my only alternative is to go into the June 19th expiration date. And that's also going to limit the number of strike prices that I have available to me. But you can see here at the $75 strike price, that's actually more than one standard deviation away, which is that dotted line. I'm going to click on that bid. I'm going to click on that ask. And I could see that it is nickel bid offered at 45 cents. I have $2.50 between the strike prices. For my own personal criteria, I need to be able to get 50 cents out of that so that I can get my 25% return. And so I'm going to ratchet this up to a 50-cent credit. And I'll put one lot out there, and I know I'm not going to get filled, but that one lot will at least help me track the stock. And if I get filled on it, then I can take another look at it, and I can see if I still want to do more of that trade. But I think that's a pretty good one. That's a really nice rally in here. Love the earnings there. Love the breakout there. Love the fact that it's been able to hold that support. Never even came back and tested it. Stock still above that halfway point on that long green candle. Those are all really bullish technical pieces of information. So I'm going to recap the stocks that I like for you today. WSM, I like it. I think that one does really well on a day trading and swing trading basis. DLTR, I think that's good. I showed you that spread. SQ also looks good. Let's bring up SQ. Most importantly, what everyone seems to lose track of, all traders, they get tunnel vision when they find a stock that they like, and they're oblivious to what the market's doing. So please make sure that you never take your eye off of the SPY. It drives all of our decision making. So as long as we're above 295, as long as we're above 300, focus on selling out of the money bullish put spreads. Don't get into anything that you have to chase. Avoid tech stocks that have gone parabolic. Those are not going to be good opportunities for you. Look for stocks that have nice, consistent price action that have just gotten through technical resistance levels. Now that becomes technical support. Sell those bullish put spreads below that technical support. As long as the market is above those two levels, you stay in the trade. As long as the stock is above that technical support that you've identified, stay in the trade. Every day that you get through that trade, time premium starts to whittle away and whittle away and whittle away, and your probability of success continues to increase. That's how we generate nice income during the summer doldrums. That's a strategy we're going to be using. Keep your size small, keep your trade count low. This is a low probability trading environment. We need clarity. We need to make sure that consumers are spending money. We won't have that information for 4 to 6 weeks. This is your roadmap for that time period. If you like this content, please give it a thumbs up. Make sure to subscribe to the YouTube channel and turn on your notifications so that you never miss these videos. Promise you, I'll have lots of actionable trade ideas in them, and I'll also provide you with lots of education and a roadmap on how to trade this market. Thank you. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.